Hello traders, welcome to this video with me, John, this live currency strength indicator table video, the first one in September. We're going to be kicking it off with nearly a full board on the tables today. Really good potential momentum to come for September. Obviously, the markets are back. However, obviously today we still have the US offline and Canada, so volumes are still going to be a little lower than usual. We expect obviously that to come back into play tomorrow. So we've only really got Europe in at the minute, and we've seen some moves, but the markets are kind of setting up quite nicely here. There's a few charts of interest that I really want us to take a look at in this video, and it's mainly around the Australian dollar and the euro, and the fact that we're seeing Euro Aussie on the board here is quite interesting to me. We can also see that the yen here is coming back as a weak currency. It tops our trend traders table. So is that telling us that the longer term picture for the yen is going to begin again with that weakness? So we'll go take a look at that market as well. And the US dollar's coming in here a little bit stronger at the moment, topping the trend traders again. So are we going to see that longer term dollar play that we have been seeing for the past few weeks continue? So let's take a look at that in this video. We're also going to highlight a few pairs of interest, so stick around. So we're going to kick it off with Aussie yen. The reason why I'm starting on Aussie yen, I like the weekly outlook here, and if we are going to see those risk on kind of market tones return, then Aussie yen is a good gauge for that. And we can see here on this weekly time frame, I'm just going to open it up a little bit here so we've got opportunity to just see a bit more of the chart, and just zoom out. You can see here that we've breached through this weekly trend line resistance that had formed from the highs on the 18th of June, and I've spread that down. You can see that we've now breached that. Last week was the close above that breach as well, which is great. I think that gives us an idea that the market may want to continue higher. Now we do have this resistance in the way at 95.50. Now it was ignored, but it then has been tested again most recently, so there might just be a little bit of a sticking point around about this 95.50 handle. A break above that 95.50 would be ideal. It would give us opportunities to trade to the 97.50, which are the highs that formed on the 18th of June, and then potentially up into the 98.50, which was this high that formed back in September of 2022. So lots of potential upside if this market does continue to go. Now I'm just going to go down into a 4-hour time frame here. 4-hour time frame I like, as it gives us a little bit more of a mid-term point of view, and you can see the price breached through that trend line here. We've come back down. Where did we retest? Well, we retested the kind of prior break sort of highs that were being stuck by the trend line. Came down into that area, and then prices started to find a little bit bullish again. If we actually go down into an hourly time frame, you can see a recognized pattern combined with that support level, and it's the inverse head and shoulders pattern. So what you see is the market creating those lower lows. We then get a higher low, and price trades through the neckline of that area. So I'm kind of looking for a pullback to that point. The reason being as well is because we've got that 50 MA coming through there. So around about the 94.32 at the moment is an area of interest for me. Whether we get back to that is a bit of a different question, because if this market is going to take off, then it could take off from this area here. You can see we're back at those prior highs on the hourly time frame. We're at 94.50, a nice number to be at, and you know, we're creating a bit of a sort of wick to the downside here. So a break above 94.66, the current 1-hour candle high, could influence some buying again, and that could take us into that 95 area and then into that 95.50. So there could be opportunity on lower time frames. What I would say is, if you're going to look at a lower time frame, then you just have to be aware that as you go down the time frames, it's a little bit more volatile. Okay, so you may want to look at that from a risk perspective. I'm looking at this on the hourly time frame. If price was to come back down into 94.30, I know that my stop loss can be under these key lows here, which would be a help to us, and I know that I've got a good positive risk to reward ratio there. Moving on to the other chart of interest, so I'm actually going to take a look at the top of our day traders, which is that Euro Aussie. Really interesting market, obviously, the Australian dollar being a little bit stronger at the moment. So can that have an influence on the price of Euro Aussie? What I like about this market in particular is we are still technically on a higher time frame bullish. You can see that we're creating this long-term upward trend. The one thing I would say is though that we have passed through the previous highs, although we haven't breached the sort of opens and closes, which were around about the one spot 66.50. Now, the only reason that I like this is probably be more from a short-term point of view than a longer-term point of view. I don't see necessarily the long-term break here yet, because from a technical perspective, we've got this trend line coming through and prices at trend line support. The only thing I like is a potential move down from this area to this cluster of highs around about the 165.50. You can see it a little bit better on the daily time frame. You can see that we had this sort of consolidative range between the 165.50 and the 162.50. So we had a good 300 pip range here before price broke out and traded through the highs, and then we rallied. So looking at this now, and the fact that we're kind of back below the one spot 67.50, is that a sign for us that maybe price is going to pull back into the 165.50? So for me, this is more of a short-term point of view. If we look at it from an hourly chart, what I'm kind of looking for at the moment is the fact that we're trading below the 50. The last time we tested the 50, we actually had a pretty decent reaction from that. We dropped around about 140 pips to the downside. So I'm kind of looking at this now, and I'm looking to see if there's a pullback potential, maybe into that 167.50 area, in line with this 50 MA. Can we then break back below the 50 MA? Can that then trigger some more short selling positions? I think that's what I'm going to be waiting for on this market. Again, this is a little bit more of an aggressive trade, I feel, because of what I'm looking at on the weekly chart. The weekly chart is something that I really like to take a look at, and we are in that sort of secondary phase here, aren't we, of price pulling back. But the overall trend is still bullish. So that's one thing I just want us to be concerned of here. There is still some potential for this market to trade higher. That's obviously if the euro can stay weaker. If it starts to strengthen, then that bullish trend could continue. But if we go take a look at euro US dollar now, we can see that the market has been fairly bearish. If I go up to the weekly time frame here, look at these weekly candlesticks, bearish, bearish, bearish. We are testing the daily 200 moving average. We are back below the daily 200 moving average, which is the kind of thinking behind there's maybe some short-term weakness in the euro. If you actually look at this zone in here, this is where I think potentially euro dollar could go and test. If we go down to that daily time frame and zoom out, it's these cluster of lows in here around about the 1.0675. That would be the area I quite like down through this point around about here. And that could be targeted. The market's making those lower highs, lower lows. We've breached multiple trend line supports here, so it looks to be fairly bearish in this market. If we look at it from another trend line point of view, we've got that trend line running through as well, which could create that sort of reaction where we had a bit of a false breakout here. Price closed below, we retested it, we dropped. The only thing is, obviously, we're back at those daily lows. That's the only concern. But if we were to go to the hourly time frame, what I just want to point your eyes to is the lack of buying going on here. Okay, and that could be down to the fact that there's no US or Canada in today. But what I'd like to look at is after an impulse move happens, what happens after that? Okay, because if the market is going to continue, or if the market is going to reverse, I would expect some kind of heavy buying to come into the market, vice versa on the sell side of things. And there's a couple of examples here that I can show you, right? So there's a big impulse move here from the support level. What happens to price after? Well, we just slightly pull back. There's no sort of aggressive selling coming back in. There's nothing like that at all. In fact, it's a very shallow pullback. What happens then? Price rallies to the upside. The only thing difference here is, when we do start to get the shallow pullback, we then start to see aggressive selling coming in, very aggressive selling. So that's the difference between the two there. Again, after the aggressive selling, what happens? Well, price just kind of goes a little bit flat, aggressive selling again. And look at price now. That doesn't scream to me yet that there's a large amount of buying coming in at these lows down through there, which makes me think that we could potentially break lower, especially cutting back below the daily 200 moving average. Now, that area there could be very, very interesting. If we look at it from a trend line resistance point of view, if we look at it from a point of view of we've got the daily 200 moving average and the hourly 50 moving average coming in here, this zone in here could be quite something to watch for, as in if price comes into this zone here, then that area there could be an area where sellers start to push price back to the downside. And that's the sort of thinking as well behind Euro Aussie. If we get that little bit of a pullback, there could be some opportunities for the downside move. Very, very similar to Euro US dollar here. I actually quite like this one a lot just because we've got multiple confluences. If I was to add a Fibonacci retracement tool onto this as well, just to see what the fib traders could be looking at, you can see the 61.8 handles there. I have reversed that just to show us our extensions with the 127.2 and the 161.8. So there is potential around that area. There's going to be some action because fib traders will be looking at this area here. The 50 moving average traders would be looking at that point as well. The 200 moving average on the daily traders would also be looking in that zone there. So I think there could be some good opportunities at that point. If price breaks above it, then also we know that we shouldn't be in that market. Okay, so if we trade through this zone, breach this trend line resistance, breach the next trend line resistance, then we're going to really know that maybe this market isn't going to continue to the downside, and there's going to be some pressures there for the market. So hopefully you enjoyed that video update, and hopefully that all made sense. And I will catch you in the next video. Yeah, stay sharp.